Hey, what's up, my friend? So, today's video is for you if you're the type of trader that is always struggling to identify the direction of the trend, right? Because I'm going to share with you 5 trading tips and techniques to identify the direction of the trend so you don't get confused, right? So, keep watching. Okay, so the first tool that you can use to help you identify the direction of the trend is a line chart. So for example, if you look at this, right, this is a normal, typical candlestick chart. And for those of you who are seasoned, right, you might probably guess already that, hey, the trend is towards the upside. But for newer traders who are struggling, right, to even see this, right, you can use a line chart to help you better visualize it. Here's an example, right? This is the same line chart as you saw earlier. And because you're only focusing on the lines, right, the trend now becomes more apparent. So if you're often, right, struggling to identify direction of the trend, try changing it to a line chart, right? And it might help you see better, okay? The second technique, right, that I want to share with you is price action, right? How you can actually use price action to identify the direction of the trend. And it's quite simple, really. What you're trying to do is to locate the swing high and swing lows in the market because in an uptrend, it consists of higher highs and higher lows. So in this example, you can see that you have a series of higher lows, higher lows, higher lows, higher lows, and higher lows, right? So this tells you that the general trend is towards the upside. And vice versa, if you see, right, a series of lower highs, right, in this case, a series of lower highs, lower high, a lower high, a lower high, a lower high, it tells you that the trend is towards the downside, okay? However, right, I do agree that, quite a number of you are actually struggling with this concept because often you can see that the price makes a lower high. But what if the price at this point makes a higher low, right? At this point, it makes a higher low. Does it mean that the downtrend is over? So there can be some little bit of subjectivity to it, right? Because if you think that at this point, right, the trend is over and you go long, right, you might be surprised to see that the trend actually continuing towards the downside. So how do you actually, handle this conflict? Right, so this is where you can actually use a tool like a moving average, right, to overcome this particular ambiguity or conflict. So the moving average is a simple indicator that pretty much sums up the historical price on the chart. So for example, a 200 period moving average simply takes the closing price over the last 200 candles, right, and plot it as a line on your chart. So as you can see over here, right, in this case, right, this black line over here is the 200 period moving average. So a very simple technique that you can use is that if the price is above the 200 period moving average, then the long-term trend is up. Okay, let me repeat once more. If the price is above the 200 period moving average, then the long-term trend is up. So this means, right, you don't have to take into account the swing high and swing lows in the market. So for example, in this case, you at this point in time, right, you have a lower high over here, right? A lower high, right? But because the price is still above the 200 period moving average, the long-term trend is still up. So you don't have to worry about, whether it makes a new swing low or swing high and whatsoever. So this is the usefulness, right, of the moving average. And on top of it, it can also help you define, right, different types of trends. So for example, I shared earlier, the 200 period moving average can help you define the long-term trend. And as well, right, the 50 period moving average, as what you've seen down here, can help you define the medium-term trend, right? So I use the 50 period moving average to help me define the medium-term trend. And if you want to define a shorter-term trend, right, you can use the 20 period moving average. And the concept is the same. If the price is above the 20 period moving average, then the short-term trend is up. Okay, so the concept is the same. It's just the number of moving average that you are using to define the different types of trend. The fourth technique that I want to share with you is what we call a trend line. So a trend line is something like support and resistance, but the only difference is that a trend line is diagonal. It's pointing in towards a direction. Okay, so you can see that a trend line in this case, right, tells you the direction of the trend as well. Because if the trend line is pointing higher, it's slanting upwards, it tells you that the trend is towards the upside. And also, just like the moving average, right, the steepness of the trend, right, the steepness of it, the angle of it, tells you the strength of a trend. If you see a trend, right, that is very steep, right, almost parabolic, it's telling you that the trend is really strong. And if it goes almost like a straight line, right, it tells you that it's really, really strong and the move is unable to sustain forever. It could possibly, reverse back in a short run. So when you see the strength of a trend, right, where the trend line gets steeper and steeper, it's telling you that the trend is getting stronger, right? And the move is not sustainable and it is likely to reverse back anytime soon. Okay, so trend line is another way that can help you identify the direction of the trend and gauge the strength of it. And also, right, another variation of a trend line is what we call a trend channel, right? So a trend channel is like a trend line. The only difference is, right, you have this upward boundary over here. So if you remove this upward boundary, this is just a typical trend line that you see, right? But now with this upward boundary, it kind of gives you a cap, right, to tell you where the market may potentially find resistance. So you can see that over here, the price bounces off the boundary. Again, this one it exceeds, then it goes back in. Then right now, if you ask me, right, over here, you might find some selling pressure lurking around it as well. So this is the power of a trend channel. It's like a trend line, but it's just two parallel lines to kind of identify the area of value and the area where the price might find resistance. Okay, and one extra tip to share with you is if you're trading trend line, it is very useful, right, to draw an area, because often people think that the moment price breaks the trend line, it means the reversal is about to come. That's not true, because a trend line is an area on your chart. Even though it's called trend line, it should be called trend area if you ask me. So you want to draw another parallel line, something like this, right? Maybe I'll just draw it. I'll try my best, right? Try my best. So you get something like this, right? Where it shows you that this is an area on your chart. Okay, like this is an area on your chart. So just because the price breaks the trend line doesn't mean the trend is about to reverse, right? If you treat it as an area, right, more often than not, you'll see that the area would hold up and the price would reverse back into its original direction. Okay, so this is another tip, right, to share with you on drawing trend lines or trend channel. Okay, so with that said, let's do a quick recap to what you've just learned, right? Number one, you can use a line chart to help you define the trend. It's useful especially when there is some ambiguity, right? So you can strip off all the wicks, the body of the candle, and just focus on the line. Second thing is you can use is price action, right, to read the higher highs and higher lows in the market. You can also use moving average if you really want something that is objective, right? If you're not good at reading price action, right, you might get confused. Use moving average to help you define the long-term, medium-term, and short-term trend. You can also use trend line. It gives you the idea to what is the direction of the trend plus the strength of the trend, right? The steeper the trend line, the stronger the trend. But do bear in mind, right, I think as you've seen, right, like the Bitcoin, the dot-com bubble, when the price goes parabolic, when the trend line is almost like one straight line, right, that move is not sustainable, and when the reversal comes, it's going to be very strong towards the downside. So I'll say that is more useful to actually trail your stop loss than looking to get on board the trade. And last but not least, we have talked about trend channel. It's like a trend line, but it's just two parallel lines that help you identify the boundaries, right, the area of value and the area where resistance, where opposing pressure might potentially come in. Okay, so if, right, you have enjoyed what I just shared and you want to learn more about my trading strategies and techniques, go down to my website, tradingwithrayner.com. It's over here at the top, the link over here, right? And you scroll down to the bottom, right? There is a couple of trading guides for you, right? One is to write trends in the market, right? The ultimate trend following guide, talking about how you can actually write big trends in the market, and the ultimate guide to price action trading, how to actually better time your entries and exits. These two guides are completely free. Just click this blue button and I'll send it to your email address for free. Okay, so with that said, I have come towards the end of this video. If you enjoyed it, right, hit the thumbs up button, subscribe to my YouTube channel, and if you have any questions, leave it in the comment section below and I'll do my best to help. Okay, and I'll talk to you soon.